subject. So look, before we get going, I've got some questions prepared for you, Jace. I'm actually really looking forward to today. It's a subject that is as much as you and I have spoken about it over the years, I still feel like I just don't quite get it all.
Okay.
And so I'm very excited about today. It's not real estate based. I mean, I guess it is real estate based,
Mm.
right? It's only maybe more dirt based than real estate. Um, but I'm here with Jace Graham, and I got to tell you first, Jace. I met him. I'm gonna see if you can remember when, because I don't remember how long ago I met you. It's been a minute. It's been what,
Probably,
6 years?
probably 5, maybe 6 years.
5 or 6 years.
Utah. We were in Utah, buddy.
Oh yeah, in Park City. We met at a mastermind group together, and Jace is an incredible just person, in and out. Not only successful in business, successful at home, a father, two boys, beautiful wife, Hillary, and got the pleasure of meeting them years ago. Actually, the first day, and just a great human being. And what I've seen over the last few years also is continued success in his area and his niche. And I also know that he's had a lot of success because typically when you're having success, people start kind of throwing ideas and money at you. And I've seen you say, no, I'm good. And so that tells you in success too. And so but in particular, this has come about, Jace, because there's been many people who've asked me and our company to give
Mhm.
and provide more content and education on what people are doing in using their IRAs.
Right.
And so we've tried to do just that, is give contact and education on different asset classes, and also with just different individuals. Because even if I said real estate, as you know, Jace, there's so many different places in real estate you can go, probably similar to your space that I'm going to jump into here in a second.
Right.
But before I kind of babble a little bit more about you, Jace, you want to give us a little background on
Sure.
you and who you are and what you've done, and just give us a little background before we get started.
Yeah, no, Greg, appreciate it. Listen, appreciate you having me on. Excited to talk about oil and gas direct investing and how you can do that. Quick backstory on me: born and raised Dallas, Texas. Went to college in the Northeast up at Cornell. Played a little football up there, slow football, if you will. I think I played in front of more guys in high school, crowd in high school, than I did in college. But anyways, but when I got back, I did a little stint in the restaurant business industry and got into oil and gas. Started out as a kind of a rookie landman. And what a landman does is they go out and lease up oil and gas mineral rights in certain areas for operators to come in and drill. So you have to get a secure lease before an operator can actually drill an oil well. And so I did that for about 4 or 5 years. Ran title, learned how to run title, grantor, grantee, back to patent, which was pretty interesting. Kind of from when the president kind of deeded it initially, when they sovereign the land and all that. And so got a good understanding of just land and land background and how deeds conveyed property from one family to the next, and minerals were severed and reserved. But anyways, joined up with my old man, Jim Graham. He was a force to be reckoned with. I'm a fourth generation oil and gas professional, so it's in our blood. I think my great granddad, my dad told me, sold a dry goods store in Muskogee, Oklahoma, for some drilling pipe, and moved to East Texas, to Tyler, Texas, to take on the oil and gas business. And so that's kind of how the Graham family got into it. But no, my old man was a great man. Unfortunately, passed in 2019, but I learned under him for about 15 years. We did a lot of drilling deals, direct drilling deals, where we went out and raised money, private money, from high net worth investors and some registered investment advisory firms. And we went out and did drilling deals, went out and drilled oil wells and natural gas wells. Also put together a mineral arm of that business, where we started focusing on buying lucrative minerals, starting in the Barnett Shale, which is kind of Dallas-Fort Worth area. And we can talk more about that, Greg. But and so kind of built that up. Did about 25-30 million in capital raise and placement between 2008 and about 2013, and ended up kind of really enjoying that side of the business. And we'll talk about the differences between them on the call. And then in 2015, had the opportunity. I wanted to kind of go out on my own and start Rising Phoenix, kind of with the focus initially on oil and gas minerals. It's kind of what I really knew, but also kind of looking at some unique and fun drilling opportunities. And then kind of dabbled, got into real estate. My wife is a licensed agent, doesn't really practice that much anymore, more on the investment side. And so we started Rising Phoenix Real Estate as well. And we started buying properties, and we would wholesale them. We would do fix and flip. My wife would also obviously do the, put them on the market and represent the sellers. And so that business has been built out. We do about 120 transactions a year in that vertical right now. Rising Phoenix, kind of the company, has about 5 different verticals, from hard money lending, private lending, real estate investments, oil and gas mineral investments, and then we have our capital raising arm, Rising Phoenix Capital. So everything's affiliated with real estate. Minerals and royalties are part of the bundles of sticks that go along with real estate. A lot of people don't always understand that, but it is part of the real estate. And so the transactions are very similar to real estate, but there's no MLS for this stuff, Greg. There's no Zillow. So you really got to know what you're doing. And I can kind of explain kind of how we underwrite and look at opportunities.
Yeah, so let's just start there. Like, just and most people that are probably listening this is new to them or foreign to them. I wanted to bring this because there's also a lot of investors that you've referred over to Horizon that use their IRAs that invest with you, and so I know it works. I actually see the returns that come in, and so I'm just curious. Can you just start from the beginning, kind of when if I say I want to invest in oil and gas,
right?
Okay, now when I say I want to invest passively, let's just say with you or one of your competitors. Okay. But what does that mean? Can you just break it down? Just let's go kind of from an elementary standpoint, and then we'll go deeper. I know there's gonna be some great questions. I already started see some popping up, and we'll go to those later. Don't worry, we'll answer questions. But what does that mean if I'm going to invest in oil and gas, and how does that work?
No, yeah, let's kind of jump right in and get a little one-on-one action going. So oil and gas minerals is what we're speaking to. This is oil that gets converted into gasoline, and then we talk about natural gas, which primarily gets converted into electricity. A lot of people are like, hey, I'm more battery powered Teslas, and I'm like, let's do it, because you got to burn a lot of natural gas to turn that into electricity. Got somebody behind you there. Anyways, so no, oil and gas minerals, what that is, in certain pockets, areas throughout the United States, there's hydrocarbons thousands of feet deep, okay, from back when just the layers of earth just doing their thing, and kind of fossil fuels, if you will. Okay, so we're not talking about, when we talk about minerals, we're not talking about minerals that people talk about on the surface, like gold and silver and coal and all that kind of stuff. We're talking deep, 10,000, 15, 20,000 feet below the surface, oil and gas minerals. And so when you own a piece of real estate, Greg, you own it in the beginning, from, they say, the center of the earth to the zenith in the sky. Okay, you have all right, title, and interest in that piece of property. Okay, and so what we do, and kind of how you can look at oil and gas, is there's a few ways that you can kind of jump in and try to invest into oil and gas. Number one is probably the easiest, is I can invest in ExxonMobil stock, right, or Chevron stock, or Devon stock on the stock market. That's not really what we're talking about here. Okay, we're talking about direct alternative investing into oil and gas minerals. And so I guess if I look at it, there's probably 3 different ways that that you can kind of look at the real estate side of this and look for opportunities. Number one would be the leasing side. Okay, so let's just imagine, Greg, we've got a farmer out in West Texas. Okay, Farmer Brown. He's got 100 acres on the surface, and he's got the minerals. Okay, he's got some cattle on it, and he's growing some corn. What happens is a landman, okay, trained, seasoned landman who's kind of run the chain of title to determine that, this gentleman does own the minerals to the center of the earth. He'll reach out to Farmer Brown and say, hey, would you be interested in leasing your minerals? Do whatever you want on your surface. We don't care. We're interested in leasing your minerals to drill an oil well. And so that's what these operators do. They hire the landmen go out, find the mineral owners. Okay, and you can find people inside the deed records. You first need to know geologically where the formation is, and a geologist kind of typically does that in the beginning with the operator. They draw a big circle on the map and they say, here's where we think oil is, or here's where we think natural gas is. And then they look at the land side of that and say, who all owns land or minerals within that polygon? Okay, and then they get landmen to go out and start knocking on doors, calling people and trying to get leases. And once they secure an oil and gas lease, typically it's 3 years to 5 years in term, and they'll pay about a 25% royalty rate. So for every dollar that comes out of the ground, the mineral owner gets 25 cents and the operator gets 75 cents. Operator's putting up 100% of the cost to drill it. Mineral owner doesn't have to put up any money. Okay. And so there's a way to, play that lease. People flip leases. Okay. People can go out and lease this acreage from Farmer Brown for, let's just say, $500 an acre. Okay. Which is a bonus associated with the oil and gas lease. So there's a bonus that's paid per acre. There's a royalty rate and there's a term. Those are the main three things that are associated with an oil and gas lease that kind of starts this whole thing, Greg.
Sorry, real quick. I'm going to interrupt right there. So on this first step, do you just kind of like how real estate people have bird dogs finding deals? Do you have bird dogs out there finding Farmer Browns? Then
yes.
they bring them to you and you negotiate those leases. Is that what you do?
Correct. That's something we don't do that specific. We actually negotiate once they're under lease and a well has been drilled. That's when we kind of jump in.
So that's how you take away some risk. Is it's already negotiated, it's already leased by, let's say, me, and then I go to you and say, hey, I'm basically a wholesaler, right? In these terms, and I go, hey, Jace, I've got it. It's already it's pulling, right? We're pulling. There's revenue
oil,
there.
Yeah, there's oil coming out. We're selling it.
I'll sell it to you. But why would I want to sell it to you? Just because I don't want to put the labor and money into it? Is that why?
So you're saying like you being the owner?
No, me being getting the original lease. Like I go to Farm.
Well, I mean, some people just like wholesalers. Why don't wholesalers?
They don't want to do the work. Yeah,
they just say, "Hey, I'm good at negotiating leases,"
and you want to do the work.
Yeah, and then they find somebody that wants to play the longer game.
Yep.
That will pay up. Hey, thanks for doing all the work. You paid $500 an acre. I'll pay you $1,000 an acre for that lease. And so you see people flipping leases in areas that are kind of not as developed. Okay. So that's one way. So kind of that lease game. People have made a lot of money doing that, especially kind of some of the speculative areas that are trending that, it's kind of heading that direction and people are getting out ahead of the rigs per se, many miles ahead. And all of a sudden the play develops and they're able to sell those leases and make a lot of money. The second way would be, the buying and selling of the actual minerals themselves. Okay. From the mineral owner, from Farmer Brown. And there's groups out there, depending on their strategy, more on the private equity side that are going after maybe non-producing minerals, meaning they're going after Farmer Brown before he secures a lease with an operator. Again, opportunistic, longer horizon, maybe 5 to 10 year window.
Riskier. Would you say it's riskier?
Riskier. But they know that there's good geology. They feel like there's good rock, is what we say, meaning it's going to get developed. It's just a matter of time. And so that's kind of where we play, but not from the undeveloped. We actually wait till a well is drilled on Farmer Brown and there's actual cash flow. The pump jack is doing this 24/7, 365. It doesn't complain. There's no toilets or tenants or any of that. It just keeps it, and we get a little check every single month from the operator. And so what we do is we would go call Farmer Brown and say, hey, Farmer Brown, you're getting $1,000 a month in royalty income from ExxonMobil. We'll pay you $40,000 today. So it's a 40-month payout. Okay.
Up front.
Up front, cash payout, similar to wholesaling. We'll pay you cash
Yep.
now.
Yep.
And farmer was like, man, I want to buy a new tractor. I don't know. And he sells his minerals, or he sells half of them, do whatever he wants. He conveys them to us, or the fund name. And then it's just like it's a real estate transaction. So it's a mineral and royalty deed that's filed a record at the county courthouse, just like a general warranty deed or warranty deed with real estate. And then we notify ExxonMobil, hey, Farmer Brown doesn't own it anymore. Jace Graham now owns it. And then ExxonMobil starts to pay me $1,000 a month, and we turn around and distribute that back out. So that's, I would say, the safest way to play oil and gas minerals, is to buy producing minerals throughout the country. And that's our bread and butter. That's what
That's your
do.
model. You buy producing. So you pay a little bit more for it because but it's, I don't like to use the word guaranteed, but it's producing. That.
It's producing. You've taken they talk about drilling and exploration. You've taken the drilling and exploration out of the equation. And so we base our economics on what we think that future production is going to do. And we use, we use a third-party reservoir engineering firm to do this. That's what I'm saying. There's no Zillow or MLS that kind of gives you an idea of kind of what this stuff, you got to underwrite it, and you use very technical people that, are licensed in this to kind of figure out kind of where you can pay.
I love that. Okay, that makes a lot of sense. So just being a little bit devil's advocate here,
okay,
because I feel like oil and gas, when that had come up earlier in my career, it was a hot topic. And frankly, back, 15, 18 years ago, it was like saying cryptocurrency. Like everyone wanted to be part of it, but there was like everyone that was like getting into oil and gas. It was one of these like, hey, if we hit and or when we hit, it's going to be this. And the performers looked incredibly great, right? But there was a lot of risk, and a lot of people lost a lot of money because they were betting on hitting, right?
Right.
I mean, and so that's not your model at all.
Well, okay. So that's the third way.
Okay.
That I would say would be investing into direct drilling deals. Okay. Now, my dad made it a career out of this. So you can do this, and you can do it prudently and mitigate as much of the risk as possible. But yeah, it would be going out and, an operator, in this case, like Pala Petroleum, which is our family's company, would go out and lease acreage from like Farmer Brown, and then we'd raise money and actually drill the oil well.
Got it.
And there is additional risk with that. You may not hit oil. But when you do, the return profile is quite a bit higher than maybe just the producing mineral side of the equation. So we look at it into two different buckets at Rising Phoenix. We've got kind of this income strategy, right, which is kind of middle of the fairway. Cash flows, we're buying producing assets. It's got a nice cash flow component, monthly distributions, all that.
So I got to interrupt you here. Sorry, Jace. That gets people excited. So give me some examples on what kind of returns that people should expect, not only with you, but maybe in general in the industry.
Yeah.
Over, what kind of returns are they seeing with you and or the industry?
Yeah, I think with investing in kind of oil and gas, you got to kind of be aware that there is commodity price swing. It's just, you have to be aware of it. Okay, meaning that oil could go from $80 a barrel to $40 a barrel in a year. Really, your real estate's not going to go from homes worth 200,000 to 100,000 in a year. So you kind of factor that into the overall how you're offering that. So when oil is higher, we get real conservative on what we offer. Maybe we're only offering 20,000 to that farmer, not 40. You know what I mean? When oil kind of is really low in price point, we can kind of get a little more aggressive. But no, Greg, it's as far as like return profiles, our funds, and like I said, I would think that, if you're investing in this type of thing on the mineral side, which I call kind of that income strategy, you're looking at about anywhere from a 20 to 30% internal rate of return. We typically are 2 to 4 year holders, and then we'll sell them. Cash flow on a annual basis is going to be in the 20% range. But you got to keep in mind, it's a declining asset. So it's not like a flat cap rate in real estate where it's, 8% in perpetuity. There's a declining component associated with it. That's what we use the reservoir engineering firms to kind of underwrite and see what that looks like so that we know what's kind of left on the bone, so to speak. So, but yeah, it's a nice, just little cash flow, just mailbox money. I mean, it's really what it is. I know a lot of our investors really like it. A lot of our investors that are on the real estate, that are heavy in real estate, whether commercial or residential, like this because it's pretty quiet. Check just shows up every month. And sometimes it's a little higher, sometimes a little lower. It's never exactly the same. But what we look at is that kind of over time, what does that look like? And
that kind of scares me sometimes when people are like investing in something and it's always the same rate of return. It's like, wait, I mean, they're pulling the exact amount,
yeah,
the same resources every month. That doesn't feel right. So thanks for sharing that. So I'm gonna pause for 1 second here.
okay.
There's been a lot of questions. We're gonna get to them. I don't want to get to them quite yet. I'm gonna wait kind of towards the last 15 minutes. Questions keep coming in. I'll Claudia come on as well and try to help with that. But before we kind of go to those questions, a couple more things that, and we can kind of, I feel like we've just barely like touched the subject here. So, but I also don't want to, some people might if you're okay with Jace still going down here, I'm going to go down this a little bit further. So, most of our investors, even me particularly, are using retirement funds, and they're looking for a passive approach.
Right.
They're not the ones that have the teams like you do. And so how does that work? Because I know a lot of investors, and I do have to say at Horizon, like, we're not a fiduciary. I'm not, I don't get paid if you work with Jace or any one of his competitors. We are here to educate and give you, as much content and resources for you to go out and do your own research to see if it's a good fit for you. But that being said, tell me, you've got lots of investors here at Horizon that you referred to us that work with you. How does that work? Is it, what are your terms like for these investors?
Yeah, no, you're right. We do refer a lot of clients that want to self-direct, take an old 401k and, convert it into a self-directed IRA so they can directly invest into alternative assets like real estate. And, a lot of people don't even know about that you could do oil and gas minerals. But no, I mean, I think it's a great, opportunity for your self-directed IRA because you can just kind of put it in there and just let it do its thing and continue to grow and not to pay tax on it. And that's typically how our investor base is utilizing that. We also, like I said, we've got a drilling opportunity that we just rolled out called the JASPO Growth Fund. And so we've got some folks that are also, using their self-directed IRA. In fact, I think we were working with your team to fill out some or help our client fill out some subscription documents where you guys are the custodian. So, we're seeing more people use their self-directed IRA to kind of look at this type of asset class. Because again, it is a form of real estate. And, it's nice and quiet and cash flows. So
what do you see? Where do you see the future of this? The next, with the politics world, in just today's world, right? The economy and the world. I know it might be a hard question, but what do you see the next couple of years?
Just my high level take. I think coal was the energy source of the past. Oil is today, and natural gas is the future. I mean, listen, I'm not against anything green or any of that. I just think that we have such a high demand in the United States for energy. And in order to satisfy that thirst, natural gas, fossil fuels, it's going to be kind of where we go for the foreseeable future. We are the Saudi Arabia of natural gas. And we're actually starting to export about 25% of it overseas. We're liquefying it, putting it on big tankers and shipping it out.
Wow.
So before, 20 years ago, natural gas was restricted to just, domestic because of, pipeline constraint, right? Now we're liquefying and exporting it out, but just like oil. So oil could be drilled in West Texas and sold on the open market. Now natural gas is doing that as well, but we got a lot of it. And we're starting to really kind of tap into that. But as far as it's interesting, I mean, anytime you see a political party really kind of push hard on restricting the drilling and development guess what the offset is? Prices go up. So it's a supply demand. So you curtail supply, demand continues to go, just based sheer population growth. Throw in a really cold winter and a really hot summer like we had down here in Texas, and a hurricane or two, and doesn't look good for pricing. As a mineral owner, you're kind of, it's okay.
Yeah.
I mean, so I guess, you can kind of, when you see that gasoline at $4 a gallon and you're pissed off, you can kind of say, well, you know what? I own some oil and gas minerals. Maybe that kind of offsets that, so you like it when it's higher.
Yeah. Well, good. Well, there's just so many questions. I actually feel like we need to go to them because I think it will help the conversation as well. So I do want to preface, and I'm going to probably put up here, I'm going to give you Jace's information, as well as if you're listening to this and you have an IRA that's not self-directed, that's you're with a traditional brokerage account and you want to invest retirement funds, an old 401k or retirement account, and you need to self-direct, obviously you can roll over with us and look at something like this or lots of other options, but we'll help you with that. And I am going to share and Jace's information as well. Let me just
yeah, and I might add, I mean, your team has done a phenomenal job with all of our clients, and just white glove service all the way through. So really appreciate that, Greg. And I know you guys work hard to maintain that level of service. So then just happen.
Go. I appreciate it. Service is why we got in the business. And so this is my information. And by the way, and Claudia is going to share this information and links as well in the chat box. So don't worry, we got tons of questions. We're going to answer some great questions, specifically to what Jace is talking about. But I do know that we need to share some of these things. So first, you can also, if he's also on our investment corner, if you're a current client of ours and you have a self-directed IRA, you can go to the investment corner and find out more. You'll see Rising Phoenix on there. And so you can follow Jace Graham. And then also I wanted to put this here, and Claudia's going to put this. I'm going to go back to this. Don't worry. We're going to go back to all the questions. But sometimes people, they got 30 minutes. So I want to at least do a little break here. This is my commercial. If you go to horizontrust.com/event, you can click on that and set an appointment. So if you just want to learn about how to use your IRA and what Jace is talking about today, or how to use your IRA the way you want to use it, set an appointment with us. We'll answer your questions you've got as far as the IRA side goes and getting your account set up with us. So again, horizontrust.com event. Claudia is going to put that link in there for you if you want to set up an IRA. For those of you that want to learn more, you're going to be able to find his information on the investment corner with Jace Graham. And you can, again, email us, contact us. Claudia, throughout the next 20 minutes of asking questions, is going to put in links and information. If you want to click on there to follow Jace or message Jace, he'll get back to you. This is why I have someone like him on there, because we are about giving. We want to give as much information and help as possible, just so you have the knowledge base to make decisions on your own retirement account and what you're doing. So that being said, I wanted that was my plug. I'll go back to it later. Obviously, you can follow me on social media. I think that's it. We'll go back to this too, a little podcast stuff. But let's go to some questions if that's all right. I'm going to introduce here too, and Alex, maybe take us back off this, and I'll go back here, unless I need to do the stop share. Probably, maybe I'll do the stop share. Yeah, maybe that did it. Perfect. Technology is my favorite. So let me introduce Claudia real quick. Claudia Guzman's part of the team. She's been with me for a long time. Actually, before she was here, she worked with me with another company, and she oversees really all new clients and affiliates coming on board working with us. And so I wanted her to come on so you have a familiar face to kind of the process. So if you set an appointment, you're going to be working with and through Claudia's team to kind of answer questions about an old 401k or an IRA. If you, again, have an old 401k and you're sick of the returns, you want to do something else, we'll help you get an account set up with us at Horizon Trust. Claudia's going to help you do that. But anyways, Claudia, do you want to just help us with some of these questions that have come up? And I think they're mostly going to be to Jace, not regarding IRAs, and that's okay. But when they do, I'll try to answer the IRA stuff. But Claudia, you want to hit welcome and hit some questions here for us?
Yeah, absolutely. We do have some questions for Jace. So we have a couple of questions for Jace, and we have some for Greg, and then we have some that are combined. So I'll start with Jace, if that's okay.
No problem.
All right. So one of our attendees is asking, do you see lithium mining as a place where you should invest?
I mean, again, that's more like I talked about, like silver, gold, from the surface mining. We don't do any of that. So I couldn't speak to that whatsoever.
Not Jace's niche. Yeah.
Mm-hmm.
Which again is what I like about real estate. It's like he knows certain areas. Jace knows his area really well. So yeah. I can't help you too much on lithium. Okay, go ahead. Next question.
All right. The next question is, what research is going into Farmer Brown's land to see if it has a mineral?
Oh, that's a great question. So from the operator, ExxonMobil perspective, a lot of research. They're geologists that are, that understand just how all that works underground. There's wells that have been drilled, usually within the areas where they can kind of look at what they call well logs, where they can see what the formation looks like. There's a lot of 3D seismic that's also done, where you've got these trucks that kind of hit the ground and send a little seismic down and reverberates back, so they can kind of see where the hydrocarbons are located and all that kind of stuff. So, I mean, I'd say before a prospect starts off, there could be several millions of dollars put in just to the R&D side to say, hey, we think that there's oil and gas here. Now, I'll just add one piece to that. Within the recent, I say 20, 25 years, we've kind of really started to develop what we call these shale plays. And in the shale plays, the way how you are able to, produce out of them is with horizontal wells, and the bad word fracking. Okay. Yeah. But there's a lot of shale production in basins that we just couldn't figure out how to develop it back in the 60s, 70s, and 80s. And then boom, right here in our backyard in the Barnett Shale, which is right outside of Fort Worth, a gentleman found a way to kind of horizontally drill into that. So you imagine drilling vertically down, you're only going into this much, but if you can drill horizontally into that formation, you can really get a long lateral into that to really kind of produce that oil and natural gas. So, but a lot of research is done for that geologist to say, hey, here's where we want to go. And it's kind of like a bullseye with kind of, here's the really concentrated where we think the core is. And then there's the, secondary and tertiary kind of areas that they kind of look at.
Perfect.
Very good. Okay. We had several people ask, what is the minimum investment for this type of investment?
Yeah. So again, we've got what we call the income strategy, which is our mineral funds. 50,000 is the minimum on that. It is a 506c offering with the SEC, so it's accredited investor only. Mm-hmm. So that's on that one. And then on the drilling deal that we're super excited about, what we call JASPO, JASPO, is a drilling opportunity on our growth strategy. Like, I mean, this thing's like a 3 to 4 to 1 return profile, 72-month payout kind of thing, with a really great operator that we know and trust. That's a huge part of it. In fact, Greg, the founder of Atoka, who's the operator of record that's going to be drilling these wells, Scott Heap did the reservoir engineering work on my dad's first big discovery field in Central Texas in a place called Rising Star, called the Blind Hog Field, back in 1976. So I was like, when we started kind of connecting back with these guys, and I was like, God, just the history between the Heaps and the Grahams just goes way back. And I was like, this is perfect. I feel really good that I've got an operator that I trust, that we know, our family knows, it's going to go out and do a good job. So that one's $120,000 units, but we're taking half units on that drilling opportunity.
And when you say we, just to clarify, that's what your fund is doing. So your investors invest in the fund, and then your fund's negotiating those contracts, correct?
Correct. Yep. Yeah. Yep. So the mineral fund, separate growth income strategy. You invest, you're in a pool of minerals and royalties throughout the country, probably 100, 200 plus wells, getting little monthly checks. And then on the drilling income kind of strategy that we focus on, which is the JASPO deal that I'm just talking about, it's 3 wells that we're going out and drilling natural gas kind of in the Gulf Coast area of Texas. And it's got some pretty cool stuff as well. There's some write-offs and all that kind of stuff. Doesn't really apply towards because you're not paying tax on the self-directed IRA, but it's still return profile is phenomenal.
That's great.
That was actually one of the other questions. Do we lose tax benefits if we invest via our Roth IRA? So that would be probably a great question.
Yeah, so you do. So if there are tax benefits in certain investments, like depreciation in certain assets, if you invest with your IRA, you don't get those. But what I like to share with that is obviously you also can invest not using your IRA, and that's another option. But that being said, I like to liken that the whole tax equation in question to what you're currently doing in your retirement account. So if you're just to do apples for apples, what you're investing in right now, and let's say you're making 6, 8, 9% on your money, and all of a sudden you don't get a tax benefit, but now you're making, in Jace's example, right, 20%, or anywhere north of that 9 or 10%, you've just increased your retirement portfolio where you're making 2 to 3 or 4 or 10% more per year, which is a complete game changer. Because obviously your IRA now or your retirement account is growing tax-free or tax deferred, and then it compounds. You're making profits or interest on interest the following year as you reinvest in different asset classes. So the quick answer is no, there's no tax benefit. But the long answer is the goal that we have at Horizon is to enhance your retirement account. We want you to make better returns than what you currently are making, having someone else advise you potentially. And again, I always throw this disclaimer out. Self-directing is not for everybody, nor is oil and gas or real estate or crypto. This is meant for those that want to really utilize their retirement funds in a way that they pick and choose. That's why we like self-directing and why I love it. I get to invest in what I know and understand and who I know and understand. And so same thing with Jace, when you talk about operators, it's relationship based, but I sure rather invest in someone that I know and understand than maybe sometimes the stock market in New York where they get paid no matter what. But that's my mentality and not everybody's. And I did see the comment about compounding. You would compound if it's an annual investment, but if it's like a 2 or 3 or 4 year deal, you're right. The compounding would happen at the end of the investment. Let's say I have $100,000 and I'm just going to use 20%, but let's say that's a big number. I'm not used to forecasting that, but I know those are the kind of returns you're getting. But let's say I have $100,000 and it's a 3-year deal. So my 100 turns into $160,000, right? Because you don't make interest on interest those first 3 years. But at the end of 3 years, let's say it pays off, just like any other real estate deal could happen as well. Now I have $160,000 that I can redeploy, and it can make its 20%. That's when you start the compounding. Every deal is different. I got people that have deals that pay off in 90 days, people that have deals that pay off in 5 years. But a lot of deals are also on an annual basis. So anyways, go ahead, Claudia.
Okay. I have somebody here that's 29 and only has $5K to invest. So obviously that wouldn't be for Jace, but Greg, do you want to go over some other options that they might have?
Yeah, look, if you're just starting out, that's okay. Like, I think the most important thing, look, I've got my son is 21. He started at 20 with his first Roth IRA. And there's little things that you can do. Obviously, you can't be an accredited fund, or maybe you are accredited, but you don't have a big enough investment. There's definitely things I would say, go to our investment corner, but also you can syndicate things. You can syndicate, meaning like my son, I know he's doing these little deals where there's 4 or 5 or 6 of them. They all put up $5,000 or $10,000 and they flip their first deal, or they wholesale something, or they invest in something together. And so there's definitely opportunities for you to do that. I say the most important thing is do it. Don't wait till like, oh, I can't do anything because I have nothing. You absolutely can do something. So.
Absolutely. Chuck is saying, I missed the details on the return. Jace, do you want to go over that a little bit more?
Yeah, I mean, looking at our income funds, our mineral and royalty funds, return profile is going to be on the cash on cash on an annual basis. It will be anywhere from 15% up to 25, 30%. Again, remember, it's a declining asset, so it could be 30, and then next year it could be 25, and then 24, and then 18. Okay, but so we're looking at roughly about an average of a 20% cash on cash return during the holding period. And when we look to sell that, the total return, including the royalty revenue that you would have received on a monthly basis, looking at a 1.5 to 2 to 1 return. So you invest $100,000, looking to get $150,000 to $200,000 back within a 2 to 4 year period, which is inclusive of the royalty distributions. On the growth strategy, the drilling deal, it's a bit higher. It's you invest $100,000, you're going to get $300,000 to $400,000 back. there is more risk involved. There is dry hole risk. And that's why we have a very reputable reservoir engineering firm, Haas, Haas, out of Dallas, that does our reservoir engineering work. And they underwrote the whole opportunity and basically came back to us and said, hey, if Atoka drills 2 dry holes, 2 bad wells, and only 1 is successful, then that 1 well should return your investors their money back. And that's when we decided to put it on our platform. We feel like that we've mitigated as much of the risk as possible, still being a drilling deal. We have a trusted, proven operator. And so that one's like internal rate of return is, 72+% because
Stop. I don't let those numbers come on this. Don't record.
I know. It's, yeah. No, I mean,
like
it's,
that.
but
Yeah.
it is what it is. So.
All right. Go ahead,
Okay.
Claude.
James is asking, do we become limited partners or general partners to help offset W-2 income? So this would be for Jace.
So again, that's a great question. So we're talking about kind of how do you get what we call the intangible drilling cost write-offs. We've set this up into an LLC and kind of worded the LLC so that you're a managing member that then converts to a member so that you can get that write-off if you're not using your self-directed IRA. But great question.
And the way that it would work for a self-directed IRA is it would be in the name of the IRA for the client. So it'd be Horizon Trust, FBO, client name, traditional IRA. And that's how we would go ahead and give the supporting documentation over to Jace's team, along with a direction of investment. It'll be 24 to 48 hours, and we'll go ahead and give the funds over so that they can start investing them on their end.
Let me add one thing real quick while I'm thinking about it, because it just reminded the intangible drilling costs. That's a big reason why a lot of people invest in these types of deals, especially towards the end of the year, is you can take up to, it's depending, but about 75% year 1 write-off. Again, it's not applicable for those that are using their self-directed IRA, but if you're investing and you're looking to offset ordinary income, you can do that very quickly with what they call intangible drilling cost.
We get so a client would get that if they use non-qualified money in your fund.
Correct. Yes. So invest 100, you can write off 75,000 or so. It's not exact, but in the first year.
Let me ask you something, Jace. I know that the minimums are 50 or 100, whatever the minimum is. Can they use qualified funds and personal funds?
Yes.
Okay, that's
and we're working with one of your clients right now that's actually kind of pulling together from their families. They've got kids and her and her husband, and they're pulling it all together and putting up.
So it can be a unit too. So if it's a husband, wife, and there you have okay, well, that's great. Okay, that could work for a lot of our clients because some of them don't have that many funds, but if they do personal funds, then that would be great.
Mm-hmm.
Okay, this is for Greg. Does the royalty distribution have to go back into the IRA? I know the answer. Go ahead.
Yeah, if you invest with your IRA, all distributions go back into your IRA. Yeah.
Yeah. Is this somebody's asking for your information? How long is the investment for? So we went over that already. That would be something that maybe you can go over again.
Yeah, I mean, so these minerals, an oil well per se, I mean, it will produce for anywhere from 30 to sometimes 50 years. Okay. And that's not factoring in like an operator can come back in and re-stimulate, re-engage an oil well to kind of get more, juice out of the lemon per se. I saw a question pop up about, would these mineral interests like go to zero? It's very interesting to see, the independent operators in the United States are very resilient, and they continue to find new ways and new methods to continue to develop the same acreage. Take the Permian Basin, which is West Texas, for example. I mean, there's 5 to 10 different zones that are different depths with hydrocarbons in them that they're going in and they're finding ways to get that out. So it's kind of like the gift that keeps giving, and we can't really forecast that into the economics, but these operators will come in and in 15 years, they'll figure out something else that all of a sudden, because when you own those minerals, you own them forever. Okay. And so any additional development that an operator does, we benefit as a mineral owner. We don't have to pay for it, which is great.
Okay. Chelsea has asked this twice. With the JASPO option, do we put up the whole 120 for the 3 wells?
Yes. So it is. Yeah, you're committed. It's a 3 well project. And again, we're doing half units at 60. So if it's 120 is a little more than you want to bite off, then the 60 is totally fine. But it's a 3-well project. Helps diversify and mitigate some of the risks. So you're not just one well, that well hits, great. If not, so again, it's we like
Can they
having
do more? They're asking if they wanted to, more than 3.
The operator, yeah. So we're gonna have our entity is gonna have right of first refusal on additional wells. So they drill the first 3 wells. Atoka is projecting they've got another 15 to 20 wells behind it, but they're picking the 3 best spots that they want to kind of prove this little area up, and then they can go in and start, pin cushioning, drilling inside it, so to speak.
Okay. Perfect. Someone wants to know, how does one qualify to be an accredited investor? So either one of you guys can go ahead and.
It's really it's about being a value of $1 million in assets, not including your personal residence. So that's something that you would know based upon your assets. Most investments, I'm not sure how Jace is set up. That's a self thing. You initial off that you're accredited or not. There's other funds that you have to, you got to fill out some forms, potentially even send some tax documents in to qualify. But most of them you self accredit. So you answer the question, yes, I am or I'm not. You can Google it as well. But it's $1 million, which is crazy because that's been the rule for I don't know how many decades. I feel like now. What it is. So
yeah, $1 million and I think 200,000 in income over the past 2 years.
1933.
There you go.
1933. All right. I think those are most of the questions.
Well, I think there's more. I've seen a few more come in. We're going to stay on for more questions. But I do, as far as the summary goes, there are monthly distributions on this one fund that Jace did describe, right? There's monthly distributions, Jace.
Monthly distributions on both opportunities.
Okay, on both funds. So look, for me, first and foremost, it's a different subject. I appreciate you coming on. We're going to stay on. So if you're going to be here, stay with us for another 10 minutes and we'll answer some more questions. But how I like to, at least towards the end, and to personalize, at least for me, is our sweet, sour, and service. And I don't know if we've done that. Have we done that together, you and I? Our sweet, sour, and service. So can you share with us? This is a good way for people to get to know you a little bit better. Tell us in the last 2 days what your biggest sweet is, and biggest sour, and what you did to help somebody else.
Sweet, the biggest sweet. Wow. My son turned 10 yesterday. It was awesome. Jimmy Jet Graham. So did a big birthday party for him.
Solid football name.
Yeah. I guess sour would be just getting back into the swing of things on the work side. I went to Spain and Portugal for a couple of weeks. So love to work, but I'm just kind of, got a lot going on right now over here at Rising Phoenix. And serve, we just upped our involvement with a local community called community service called ACT, which is Advocates for Community Transformation. And pretty excited to, be a financial partner of theirs to go out and improve some of the neighborhoods that we also do single family fix and flips in. So
okay, thank you for sharing that. That means a lot. And so I don't want to end just here, because I do feel like that there's still some questions. And so once again, we're going to send you guys the recording. We're also going to send you links so you can set appointments if you don't have a self-directed IRA and you want to move over some. That's the other thing. If you have an old 401k or old IRA and you want to move over funds, you're welcome to do so. Just part of it. You can leave half and move over half and do that. And we're also going to give you Jace's information on this email. It's going to go out, I assume tomorrow, Claudia, right? That will have Jace's information so you can contact him and just ask him questions. And it might take him a minute to get back to everybody, but I know Jason, he will get back to you. So should we, since we have people here still and they're asking questions, can we keep going with a few more questions?
Yeah, absolutely.
I might add real quick that we're doing a kind of more in-depth webinar on this Tuesday at 3 p.m. Central on the JASPO growth opportunity. So we're really going to kind of go down the rabbit hole and really explain what that is for about 45 minutes.
Why don't we put that also on our email that we send out? that'd be great.
The link to that, sure.
Yeah, so send that over to us and we'll get that out to you.
Yeah, I sent it to Claudia.
Okay, perfect. And then I did see one quick question that came up, and Claudia, maybe you can grab a couple others. Is if you have a current 401k with your current employer, that is true, or a current 403b or TSP, you can't move that over. Those are type of retirement accounts that are that stay with the employer until you retire or let go or leave. Once you leave, and 50% of Americans have changed jobs, you're then able to move that 401k and transfer it into a self-directed traditional IRA account. And then you can do what we're talking about. So if you, your spouse, or someone you know has that, you absolutely can open up a self-directed IRA. So let's go ahead. What other questions you got there, Claudia?
Yeah, so somebody is asking, how do they get started? So how does it work if they do have some funds that they wanted to transfer over?
Yeah, I mean, I think, there's links inside y'all's investment corner on both opportunities. I think you're gonna, that have ways to get in touch with us via phone. Email is invest@rising-or-phoenix.com. I think there's a link on there also to schedule a 25-minute call if you just want to kind of really go in. So a few ways you can get in touch with us.
But we're going to send that email tomorrow. It's going to have all the information and the recording. And again, I always have to say, look, we are not, I'm not a CPA, not an attorney. At Horizon, we don't make those decisions. You'll be making them. Sorry, I got to keep saying it because I always want to make sure it's clear. We are really engaged, and it's important to us to provide great content and information so people can just learn more about what people are currently doing in today's marketplace when they decide to leave the traditional marketplace. So anyways, let's keep going here, Claudia. Let's go another 4 or 5 minutes and we'll stop about 5.
Yeah. Do you want to go over how it works on our side, Greg? If they are interested in getting a consultation, like how long it'll take and what the process is on our side?
Sure. I mean, you might do better on this, Claudia. Why don't you do it? This is your category.
Yeah, so if you're interested in actually getting a consultation, what you can do is just click on the link and we will set up an appointment with one of our IRA specialists. They'll go over all of your options. They'll go over your statements with your previous custodian, and then we'll go ahead and set up an account for you. And at that point, we'll set up an appointment with one of our liquidation specialists. The liquidation specialist will get on the phone with you and your resigning custodian, and they'll go ahead and start the process to move the funds. We'll go ahead and make sure that we follow up every 3 days to make sure that the funds are moving. And once the funds are here, then we'll let you know, and then you can have your appointment with Jace or any investment of your choice. And at that point, they will go ahead and go over the supporting documentation and what you need on their side. We will connect together and we will go ahead and send out the funds. So total time is about maybe 5 to 10 days, depending on the resigning custodian, but it moves really quickly. We get you on the phone with Jace and his team so that can happen at the same time and you're not waiting. Or if you don't have an investment picked out yet, then you can go ahead and think about it while the funds are moving. So it's a pretty seamless process on our side for sure.
And I'll add, I saw a couple of questions coming there. Sorry, I want to get back to some of these ones for Jason since we have them for a few minutes, but there was a couple fee questions. I definitely don't skirt around the fees. We are, I think, one of the best. We're all inclusive. And so our fee schedule ranges anywhere from 1% down. So our average fee is around 50 to 60 basis points, which is about 0.5% per year. So you can do the math, even if you're at the highest level of 1%, which is the smallest accounts. The bigger your account, the smaller the percentage fee is. But to give you an example, if you're paying around 0.5% and you're making an extra 2, 3, 4, or 10% more, I'm not going to say 70, Jay, sorry. Obviously that, that 0.5% or 1% is definitely worth it to be able to unlock your retirement funds. But those are the fees starting in year 2 going forward after you get things set up in the first year. So it definitely more than pays for itself with the returns that you get. And we're really proud about that. You can ask for a wire or transaction every day, and we don't nickel and dime. We don't charge you for the transactions or fees for wires, etc. So we're real proud of that. So let's go a couple last questions. Let's do 2 more questions for Jace. And again, don't worry, we're going to give you all the information tomorrow so you can reach back out to Jace or us to set an appointment or ask more questions. So let's do 2 more if that's all right.
Absolutely. So I'll do one for each. Can I use this for leverage for real estate loans and get the tax savings? Who would know that?
Good question. I do have investors that utilize their investment with banks that will allow it. But yeah, it's not typically done when you're investing into a partnership. Obviously, if you own the minerals direct, that's a different story. You can do that all day long. But I do have some investors that do that.
Okay. Kenneth is asking, is a 401k from old employer that has contributions from employer eligible for self-directing? So, I mean, if you left the employer, I don't think that they would do contributions. If they still are, they probably won't let you move the funds. But if you left that employer, you more than likely can go ahead and move them. So schedule a call with us and we'll go over your specific situation. And that'll be the best way for us to determine if we can transfer those funds over. That would be.
That's right. Claudia nailed it. Look, there's a lot of different types of retirement accounts out there. If you're unsure if yours qualifies to self-direct, it's as simple. There's no hard sales call here. You call, set an appointment. We'll answer your questions. We'll talk about your account and let you know if it qualifies or not. So look, thank you so much, Jace. Thanks for taking time. I know it's a little bit later out there in Texas. And it was really nice seeing you. Glad you made it back safe from the family. Let's give them a little bit of love on the chats. Thanks all the feedback for you guys sticking around, asking lots of questions. So thanks again, and look forward to talking to you soon, Jace. Appreciate you.
Yeah, appreciate you guys. Thank you.
Thanks, everyone.